Here's what we'll cover. First, I'll introduce our initial indicator and guide you through the process of adding it to the chart, and then we'll also share the optimal settings to maximize its performance. Next, we'll take a look at the second indicator. We'll discuss its purpose and demonstrate how to add it to your TradingView chart. Then, we'll walk you through adjusting its settings to enhance the overall effectiveness of our strategy. After we'll cover the individual indicators and their optimal settings, we'll delve into the core mechanics of the strategy. We'll clearly outline the trading rules you should follow. To help you understand better, we'll present several real-world trading examples so you can see the strategy in action and gain valuable insights into its implementation. To get started, open your main chart window and click on the indicators button at the top. A search box will pop up. Just type Confluence buy sell in the search field and find it in the results and click on it. Great. Now let's dive into customizing Confluence buy sell indicator to fit our strategy. For this video, we'll focus on using the powerful Fibonacci feature. First, head over to the indicator settings and go to the input section. Here, disable all strategy options except for the Fibonacci strategy. That's the one we'll be working with. Next, enable the Show Fibonacci Levels option and disable the rest. This will give us a clear view of Fibonacci levels on the chart. Next, let's move on to the Style tab. This is where we can personalize the appearance of the levels. Feel free to play around with different colors and thickness settings until you find a style that suits your preferences and makes the levels easy to read. Once you're happy with the customization, click OK to save your preferences. Alright, now that we've got our Fibonacci levels set up, let's move on to the second indicator. Head back to the top of the screen and click on the indicators tab again. This will bring up the search bar. This time, type in a squeeze momentum indicator. It's a fantastic tool that helps us spot potential breakouts and momentum shifts. Once you see it in the search results, go ahead and click on it to add it to your chart. Alright, now let's fine tune the squeeze momentum indicator to fit our strategy. We'll start with the input section. First, set the BB length to 45. This adjusts the period of Bollinger Band, making them more responsive to recent price movements. Next, change the BB multiplier to 3. This increases the width of the Bollinger Bands, helping to identify a stronger price movements. Then, set the KC length to 45. This adjusts the period of the Keltner channels, similar to Bollinger Bands. Finally, change the KC multiplier to 3. This increases the width of the Keltner channels, helping to capture more significant price movements. Now, let's move on to the Style tab. Change the first plot option to Area. This will fill the area under the plot, making it easier to visualize the momentum. Then disable the second plot. This simplifies the chart, allowing you to focus on the most important information. Now let's discuss the Confluence indicator and its use of Fibonacci levels to identify market trends. This indicator plots 2 Fibonacci levels on your chart, providing a clear view of the market's overall direction. When the price candles are positioned above these Fibonacci levels, it indicates a bullish trend. In other words, a bullish trend suggests that the prices are generally rising, presenting potential buying opportunities. Conversely, if the price candles are below the Fibonacci levels, it signifies a bearish trend. A bearish trend implies that prices are generally falling, which may signal selling opportunities. Alright, now let's dive into the squeeze momentum indicator and how we use it in our strategy. This indicator helps us understand the market's momentum, which is basically the strength and direction of price movements. When you see the area of the oscillator is green and positioned above the zero level, it means there's a bullish momentum in the market. In simple terms, a bullish momentum indicates that prices are likely to go up. So, in these situations, it's a good idea to focus on entering buy trades. This way, you're trading in the same direction as the market trend and momentum, which increases your chance of success. Now, let's talk about bearish momentum. If the area of the oscillator is red and positioned below the zero level, it signals bearish momentum. This means that the market is trending downwards and prices are likely to fall. In this case, it's better to look for sell trades. Alright, now let's walk through a trading situation together. Imagine the price candles are forming above the Fibonacci levels. This is the sign of an uptrend, meaning the market is generally moving upwards. What we're looking for next is a retracement, where the price pulls back to the Fibonacci levels. Once that happens, we need to identify recent swing high. That's the highest point of the price reached before pulling back. Now, if the price breaks above the recent swing high, it indicates that the market has the strength to continue going up. But before we jump into a trade, we need to check out the squeeze momentum indicator. Make sure the area is green and above the zero level. This confirms that there's bullish momentum and it's a good time to enter a buy trade. And to manage your risk, we'll set a stop loss at one of the Fibonacci levels. This helps protect us if the market moves against us. For our target, we'll use a risk-reward ratio of 1 to 1.5. This means every $100 we risk, we're aiming to make $150 in profit. And after our first buy, we spot another opportunity. The price, which is still above the Fibonacci levels, retraces back to those levels. Once that happens, we look for the most recent swing high and wait for the price to break above it. And when it does, and the squeeze momentum confirms that, we enter a buy trade. Then, we set our stop loss and target for the trade. Alright, let's look at a trading situation where we're considering a sell trade. Imagine the price candles are forming below the Fibonacci levels. This is a sign of a downtrend, meaning the market is generally moving downwards. What we're looking for next is a retracement, where the price pulls back to the Fibonacci levels. Once that happens, we need to identify the recent swing low. That's the lowest point of the price reached before pulling back. Now, if the price breaks below the recent swing low, it indicates that the market has a strength to continue going down. But before we jump into a trade, we need to check the squeeze momentum indicator. Make sure the area is red and below the zero level. This confirms that there is a bullish momentum and it's a good time to enter a buy trade. And to manage our risk, we'll set a stop loss at the Fibonacci levels. For our target, we'll use a risk-reward ratio of 1 to 1.5, just like the buy trade. Now let's check out the Apple 1-hour chart for a better understanding. Here, we see the price is below the Fibonacci levels, indicating a downtrend. Then a retracement to the Fibonacci levels happens. After that, the price breaks down the recent swing low, and the squeeze momentum indicator confirms that. So we enter a sell trade and set our stop loss and target levels. And if the price breaks through the Fibonacci levels, don't trade until a clear trend appears on the chart. Next, let's look for the next opportunity. Here, the price goes above the Fibonacci levels, so the trend changes to upward. Then the price retraces back to the Fibonacci level and then it breaks above the recent swing high, and the squeeze momentum indicator confirms that. So we enter a buy trade and set our stop loss and take profit target for the trade. After that, the price retraces back to the Fibonacci levels again and a bullish breakout of the last swing high happens. And with the confirmation of the squeeze momentum indicator, we enter another buy trade. And if you want to always have a great confidence in trading, even as a beginner, make sure to check out the recommended video on the screen. It will help you build a solid foundation and take your trading skills to the next level. Happy trading!